Okay, let's return to markets and to our market master, Richard Titherington, Chief Investment Officer, Emerging Market Equities, joins in. Good morning, Richard. Thank you very much for joining us this morning. In your previous conversation with us, you said that India will outperform its peers. In fact, it has, delivering over 25% returns in dollar terms so far this year. Do you see more upsides for Indian equities in the second half of the current year?
Well, I've been optimistic about the outlook for Indian equities for some time, and it's gratifying to have been right on that. I think where we go from here is very much a function of how quickly the new government moves forward with its reform progress. And in broad terms, I'm still optimistic over the medium term.
Okay, let's come to the energy sector, since that is expected to see a lot of reforms from the government. What are you expecting from the government in this sector?
Well, I obviously don't know what the government's going to do, but I think clearly the key issues are around subsidies and introducing market pricing into the energy supply chain. These are easy things to say, but they're very difficult things for a government, even the new Modi government, to do. So we'll have to see what they actually come out with.
So in effect, are you playing the energy sector in India at this point in time?
Well, we have been investors in the energy sector, and as you know, the stocks have done very well. We're still optimistic for the medium term, but we think a lot of the good news is priced into the market right now.
Okay. So is energy a part of your defensive sector positioning then?
Well, I think that you want to be invested in what I would broadly call domestic cyclicals. If you think that the economy is going to pick up in the second half of this year, and more importantly, in 2015, you want to own companies that will benefit from that domestic cyclicality.
Okay, Richard, you have been correctly and luckily cautious on IT. Infosys yesterday announced a new CEO. How are you approaching the stock in the sector?
No, I think the IT sector, having underperformed significantly in the last couple of months, given the optimism around the domestic part of the economy, could be interesting. I mean, obviously, we don't know what the new CEO is going to do, and I think you're not going to have a clear idea until probably the fourth quarter of this year, but it's an area certainly worth looking at.
Okay, what about the other defensive sectors, FMCG and pharma? Would you start taking interest in them at all?
I'm a little bit concerned about the valuations in certainly the consumer staple area. Pharmaceuticals, again, I think selectively you need to be very stock specific, but I think I'd rather be exposed to domestic cyclicality rather than the more defensive areas of the market.
Well, the markets, Richard, are trading at historical valuations now. At what level do you think will global investors start turning cautious towards India?
Well, I think the Indian market right now is, broadly speaking, trading at fair value. That is pricing in some good news, but not a dramatic amount of good news. If we go to valuations that are significantly above historical averages, then I'd get more concerned. But right now, I think that valuations are about fair for the Indian stock market.
All right. So since you did mention that valuations are fair, what are you doing with India? Are you adding more weight into the Indian markets?
Well, I think we need to see what the government is going to announce with the budget and the next couple of months of the start of the reform process. I'm comfortable with my overall exposure to India right now, but we'll need to see how both the economy looks in the next 6 months and the extent to which the government is able to meet what I think are pretty high expectations, particularly amongst domestic investors.
Well, Richard, shall we concentrate on flows? We understand that ETFs are beginning to see large inflows. So do you think we should expect more FII flows into emerging market funds?
Yeah, I think money is starting to flow into the emerging market funds. And I think at a time when, there's quite a lot of bad news around emerging markets, if you look at Russia and Brazil and even China, India is one of the parts of the emerging world that people are feeling optimistic about right now, and you can see that in flows.
So what, according to you, would be the key risks for Indian equities in the second half?
Oh, clearly the risk for India is that the government disappoints,
okay.
And that the measures that they announce are not as radical and as reform-orientated as Mr. Modi's statements up to now would lead people to suggest. So I think from an Indian perspective, it's clearly around the government and whether they can meet expectations. I think investors will be quite patient to see the benefits of those announcements, because clearly we're not going to see the economy perform very strongly until 2015. So I think it's all around the government and the pace of their reform agenda.
All right, so within your overweight stance, Richard, where do you see a risk of valuations?
Well, I think some of the infrastructure companies have gone up a lot, and clearly, there is a view that you're going to see a big pickup in infrastructure spending. I'd be a little bit nervous about some of those stocks.
Okay, well, some of them have actually started to correct now, the likes of Suzlon, etc. But what is your sectoral picks in the Indian markets? I mean, what's your top sectoral preference?
Well, as I said, I think you want to be overweight beneficiaries of a pickup in domestic consumption, so kind of what I call consumer cyclical sectors. I think the financial sector, still broadly speaking, looks pretty attractive. I'd be a little bit nervous about some of the very highly valued consumer staple stocks, and also maybe some of the infrastructure companies.
Okay. Richard, would you say that we have seen the better part of our bull rally, or do you think that we are at the start of a sustained multi-year bull market?
I think if the government lives up to the expectations that people have got for it, I don't see any reason why the outlook for India won't look better than it has done in recent years on a sustained basis. Probably that means India looks more attractive than the rest of the emerging world, and that could well set the seeds for a sustained bull market, yeah.
Yeah, a lot of attention on the heavies, and perhaps they are fairly priced, but the mid-caps, many people believe, still have a distance to go. What is your view on mid-cap and small-cap stocks in the Indian markets?
Well, I think at the small-cap area, by definition, you need to be stock-specific. And I certainly don't think that people should buy small capitalization companies indiscriminately. I still think that there are some stocks that look very attractive, but in general, I think investors should be more cautious now about small caps than they were a couple of months ago.
All right, so let me just pin you down to some numbers. What kind of returns do you expect from Indian equities over the next, say, 12 to 24 months?
Well, I never like to forecast specific target returns, but I certainly don't think that over the next 6 months you'll see as bigger gains from Indian equities as we've seen over the last 6 months. But I think when you look out on a 12 to 24 month view, Indian equities will be strong performers, and I think that India is quite likely to outperform other emerging markets over that time period.
All right, on that optimistic note, Richard, thanks for joining us. That's the word coming in from JPMorgan. They continue to believe that India will see a further up move and could be at the cusp of a big bull market.